Hi, we're going to continue with Chapter 2. We're going to now enter transactions into the accounting equation. The equation is a mathematical concept that has an equal sign, meaning that the left-hand side has to equal the right-hand side. So when we finish putting our money into these columns, we're going to add up the left-hand side, which is the asset side, and we're going to see if it equals the total of the right-hand side, the equity side. So what I did, I listed 3 assets for this problem that I'm going to make up. It's not in your books. So if you can just follow along with me, I'm trying to explain how you're going to be working the exercises and problems in Chapter 2. But under assets, I put 3 assets: cash, plus accounts receivable when someone owes you money, plus equipment. And then on the right-hand side, I have accounts payable for the liability when you owe money, capital, the owner's investment, drawing when you take money for personal use, revenue, money you're earning in your business, and expenses, money that you pay for things to operate your business. So let's say that this man, he's opening a painting business. He's going to paint houses for people and maybe the insides. But anyway, the first thing he needs to do is go to the bank and open a checking account up for his business's money, for his checking account for only his business. So he's going to take, let's see, I'm going to say that he's going to take $5,000 that he's maybe saved up on his own to open his business. And he's opening a checking account at the bank. So we're going to put, I'm going to put transaction A, meaning my first transaction, and I'm going to add $5,000 to the cash account, meaning that now he's got $5,000 in cash. But accounting tells the other part of the story. Where did that money come from, that $5,000? It was his investment, which means it's his capital now. So under capital, I'm going to add $5,000 to the capital account. So here's my equal sign, so you can see that both sides equal 5,000. So then the next thing he needed to do, the second transaction, B, he's going to need some equipment. He's going to need some ladders, those big ladders. He's going to need some sanders and maybe paint sprayers, some equipment. So he goes and buys equipment costing $3,000. So I have a column for equipment here. I know I didn't write that very clearly, but it's equipment. So I'm going to add $3,000 in the equipment category. Now, did he pay for that $3,000 or does he still owe it? Well, he did a little of both. He made a down payment of $2,000 in cash. He paid $2,000 in cash. So I'm going to go to cash and put minus $2,000. That means he still owes $1,000. He bought it for $3,000, paid $2,000. He owes $1,000. So I'm going to liability account payable, and I'm going to add $1,000 to that column. Now you see the pluses and minuses I'm putting in. That means what I'm doing to that column. It doesn't affect any other column. So I didn't have anything in accounts payable before I put that $1,000. He had a zero balance. He didn't have any debt. But now he's got a debt. He added a debt of $1,000, so it's a plus. Over here in cash, he wrote a check, took $2,000 out of his cash at the bank. So I'm subtracting now $2,000 from $5,000, which is going to give me a balance of $3,000. I'm just going to put a B here for balance of $3,000. All right, the next transaction, C. He had to pay rent. He's renting a little office warehouse for $1,000 a month. So rent is an expense. I don't have anything in this column, so I'm going to add $1,000 to the expense column. And he paid cash. He wrote a check. I'm going to go to his cash account and subtract $1,000 from cash. Now he's got a balance of $2,000 in cash. The balance. Okay, now he got some work. He got a job. He was going to paint a house. And he painted the house. He did the work for the customer, and he charged the woman or man $2,000. So he earned it. So under revenue, I'm going to add $2,000 to the revenue column. Now, did he get paid cash? Do they still owe him? And again, a little of both. So the customer said, I'm going to give you $1,000 now in cash, but I'm going to give you the other $1,000 next month. So he goes back to his books. He adds the $2,000 that he earned to revenue. Then he's going to go to cash. We're adding $1,000 to cash that he received, and the customer still owes him $1,000. So now I'm going to go to accounts receivable. That's when a customer owes you money, and add $1,000 to accounts receivable. All right, now another balance in cash. I'm only balancing right now when I have more than one number. So now he's got $3,000 in cash. So we're going to go to transaction E. So in the next transaction, he's going to make a payment on account for that money that he owes for buying that equipment. So making a $500 payment on account. So that's like his charge account. Remember up here, he may have put $1,000 when he bought that equipment. He owes Visa or whoever he charged to $1,000. Now he's going to pay $500 of that $1,000. So I'm going to go to cash, minus $500 out of cash, and I'm going to go to account payables column and say minus $500. Because now I'm going to subtract $500 from $1,000. He only owes $500. And cash now, I'm going to subtract, he's got $2,500 in cash. The next transaction, F. His customer that owes him $500, who owes him $1,000 rather, is making a payment to him of $500. She says, oh, I have $500 that I'm going to pay you now, and I'll still owe you $500 more. So he's going to go to cash. He receives $500 on account. $500 he received, we're putting it in cash, and we're going to go to account receivable and minus $500 because that lady is owed him $1,000. She's making a payment of $500 to him. So now her balance is $500. She only owes $500. So he needs to still receive $500. And now he has $3,000 in cash. Then I'm going to only do one more because I want to have enough room at the bottom. But I'm going to say now he wants to take some money out of his business because he wants to do some personal things for himself. So he's going to take $500 out of the business for personal use. So he writes a check to himself for cash. So I'm taking $500 out. And since it's for personal use, we go to the drawing column. And nothing's in there, so I'm adding $500 to the drawing column. All right. Now, I wanted to really put more into this, but we're running out of room. But say like he paid the phone bill. He had a phone bill. That would be another expense. I'd be adding that over to the expense. I'd be adding, say, $100 plus $100. If he earned more money, painted another house, he'd be adding it to revenue. And so now we're going to stop and get our balances for the end of this exercise. So in cash now, it looks like he's got $2,500 cash left in his account. Bring down, he's got $500 the customer owes him. And equipment, I'm bringing down $3,000. Here's my equal sign. He's got $500 he owes on the Visa bill, I'm bringing down the 5,000 capital, that didn't change. I'm bringing down 500 for the drawing, 2,000 revenue, and 1,000 expenses. All right, now we're going to see if the equation balances. If it doesn't balance, then you did something wrong. Now, what I'm going to do is I'm going to back to the top and look at those plus and minus signs between my accounts here. That is going to tell me what to do with my balances. So my cash, I'm going to add my three numbers together. So I'm adding these together. So I believe I'm going to get $5,500. Looks like $3,000 in cash. Let's hope I'm doing this. 2,500 plus 500 plus 2,500 plus 500 is 3,000. It looks like $6,000 in cash equals, and then I'm going to come over to the account payable side, and I'm going 500 plus 5,000 minus 500 plus 2,000 minus 1,000. So let me do that here. So 500 plus this right here would be 5,500 minus 500 would be 5,000. 5,000 plus 2,000 equals 7,000 minus that 1,000 equals, oh my goodness, I'm running out of room, equals 6,000. So I balance. Here's my total, 6,000 here that I equaled here, and here's my 6,000. You really don't need to show this at the bottom. I'm just trying to show you how it balances. And again, let me just say, I'm adding my three assets together, came to 6,000 equals, and then I followed the signs across the top. 500 plus 5,000 plus the capital equals 5,500. Then I went minus 500, so that brings me back to 5,000, plus 2,000. 5 and 2 is 7, and then I went minus 1,000. From the 7 is 6. So the equation balances. So that's how you're going to do the transaction worksheet. And the next video will be on the financial statements, and I will take these balances and we'll make the financial statements from this problem that I'm doing. So if you have any questions, please let me know.